Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Welcome back, everybody, to the Norris Group Real Estate Podcast for Part 2 with Bruce Norris and his market timing journey. Hope you enjoy. Just kind of for your knowledge, it was July 16th of 2020 when it went under 3. That was the first time. And then we actually enjoyed almost 18 months of, it got as the lowest it got was 2.69. Okay. But then, and so from July of 2020 to January of 2021, it stayed under 3. So it was a good run where a lot of people did the opposite of they refied and didn't take money out. They just refied because they were just lowering their monthly.
Right. Yeah, they refied it 3 or 4 times and just kept on. But I'll tell you, the other thing they did sometimes is they did pull out money, but it didn't change their payment. And what they did is they added a room that they've always wanted, like an office, or they put a pool in at no monthly cost. And that's why you have so much solidity in today's real estate market. There's a lot of people aren't going anywhere. I'm good. Great.
How do you feel now that it's 38 trillion? Do you think we're going to hit that 40 trillion?
Huh. Yeah, in about a year.
Because we went from 37 to 38 in a year, right?
It can go up. It can go faster than that. Probably will. So yeah, you'll have 40 trillion within 12 to 18 months for sure.
Wow.
But see, the bond market is not happy about that. There's, that's one of the things that, we'll talk about when we get to why this report that we're going to do is important. That's one of the problems. There's really some really smart people like Ray Dalio who talks about the dollar losing its world currency status because of that. Well, that's a very big.
Yeah, that's in my notes.
Okay.
Later on. Okay, so let's fast forward to 2022. You released Uncharted Territory, but you quickly followed that up in 2023 with what you called your last report, and that was what's next. 1%. Because let me just say something about Uncharted. Uncharted, you were literally saying like, hey, we're headed into uncharted waters. Because we haven't been there, and you had an idea of what would happen, and it actually turned into like what you thought your two outcomes were going to be. It was either going to be a 1% mortgage or a lost decade, and that's what the title of the 2023 report was. Now you settled on a lost decade. Can you talk about why it wasn't the 1%?
It wasn't 1% because the mortgage rate wouldn't go down that low. In other words, you would need that to accelerate the prices. Okay, just like we needed a 2% mortgage to do the crazy thing. Well, we did the crazy thing with the 2% mortgage, and we got everybody in when they were euphoric at the very. A lot of people went in at the top with this big purchase price, but they had a mortgage rate that started with a 2, and so I mean they're good. So what's interesting is that's why this is such a safe journey to the next up movement, is that you're going to have very little price movement because you have no room for it. Okay, when you go from 2.5 to 5, 6, 7, okay, well that price should come down, except for no REOs and all the people that have a 2.5 to 4% mortgage going, I'm good. So there was just enough inventory matched with just enough buyers. Now, what we did say in that report is the big problem is the industry will be in a Great Depression as far as commissions. So if you look at the commission structure for the entire industry for doing loans and getting commissions for selling real estate, it's 45% off. That's 45% unemployment. That's a Great Depression.
Yeah. Has there been so is there other places where there has been 1% mortgages or lost decades around the world?
Don't know the answer to that. 1% mortgages? No, I don't think so. But you could say that maybe is true in Japan. I'd have to think about that. I think Japan had such a big price increase that they did go down to a very low interest rate, probably just to save taking back properties and stuff like that. But I'm not sure about that. But I know they had very low interest rates for a very, very long time.
Well, I think I remember sending you Japan's lost decade.
Yeah.
It was a report.
It lost 25 years.
Yeah. It's a little longer than a decade. Yeah.
Yeah.
All right. Well, so let's talk about your latest endeavor, which is Beyond Uncharted. What's next has never happened. Let me start by saying in 2023, we told everybody that this was going to be your swan song and you weren't going to do it anymore. So just for the record, Bruce, I'm never going to say this is your last report ever. So that will never be, because you actually wrote that in the piece that you wrote for me to promote it. You said one last time. I said, nope, taking that out. Because I feel like as long as you're capable and as long as you're you're able to, you're always going to want to help investors. So that's just how I feel. And I think
it's not just that. I've discovered things that, okay, I don't know enough about that. That's kind of what this is about. We'll have the normal charts and go over the history and all that. But there's some very significant things that have never happened. And you're going, okay, well, how does this work? I mean, and it's over my head. So as you know, I'm
going to get into this a little bit right now. So, all right. So, but first of all, on top of what we're going to give California investors, are you going to try to expand this to make it, give it more of a national feel and how they could, interpret it into other markets? Because I know there's a lot of California investors that are now investing in other places, Indiana, North Carolina, Florida, Texas, Nevada. So are we going to try and, tie how you see things in California and maybe say how this would work on a national scale?
Yeah, it's one of the reasons it's been easier to discover the sequences is that California is exaggerated. Okay. So when you have the charts, it's got more of this going on.
Mm-hmm.
I don't know that I would have been able to figure out had I gone to Texas or Florida, which is like for a long time. I don't know that I could have made the discoveries that I did. California, ran up to double the national price, and there were characteristics of that. And then when it came back down some, all of that told a story that was really only true in California. But then you realize when you start doing Florida, okay, it's a moderate version of that. The emotions of the buyer and seller are reacting the same. It's just not as exaggerated. And so, yeah, I think the combination of doing the Florida and California report will tell a story that is national. In other words, you don't buy a house in the nation. So it's kind of pointless to say that. So in other words, pointless to do that. But you can say, okay, are you in a state that's similar to Florida or similar to California in a price aggression and giving it back? Okay. And
well, have you ever looked at what places are like California? Which ones mimic the national scope?
I'd have to say you'd have to go to the highest price places. You'd have to probably go to Hawaii, New York. But again, New York is very different. You got the city and you got all that. So I'm glad I got stuck with California because it seemed like that was a very telling thing. So, and I think what I've also said is you kind of have a roadmap. So if you want to go find something out in Tennessee, get the charts. You know what the story is. See what the story is. Where are you as far as maxed out to your capacity in Tennessee? There'll be history of that. And
So
the charts, that type of thing.
and now we have the actual mood that we have for the whole country, the whole state. Um, Now, one of the things that people would always talk about is your big number was affordability. Oh, is Bruce thinking it's going to be 17% all the time? Or now we've been camped out under 17 for 3 years now.
Which
Have
is the
you?
first time ever.
That's what I was about to ask you. Has that ever happened?
No, and that's why the title is very viable, that you have a lost decade, because you're not going to build a lot of momentum on sales. People aren't going to, like, when it goes up to 19, everybody think that if you lower interest rates, it's going to be a big deal. No, it's not. They're not in the mood to buy. They probably made a decision to, okay, I'm going to rent for another year. The payment when he gets to 17 is historically the max payment. So you get to 17, 18, 19, you don't have a rush to go, oh, yeah, I want to buy that. We're a long ways away from that. The only reason we don't have price damage is you don't have a bunch of people going, I got to sell this stuff.
Well, and then how many people also like miss their windows, have a different job, aren't in the same situations where, you know what, like, yeah, affordability went up, but me personally, I can't buy a house now, now, one of the things that I'll wait for, I'll skip the next question I have, but, innovation's great. And, Aaron used to talk about it all the time, but one of the things that people fear is what's going to happen with artificial intelligence.
Yeah.
Artificial intelligence is going to I think it's going to cause great harm before it causes, gets everybody back to, a place where they're happy, because there's going to be a lot of things that are going to be replaced. And so my question is, what's the biggest danger to the housing market? Is it how it's going to affect unemployment?
The housing market, I'm just trying to think. The job replacement in general, let's say, I can't say that I've come to a conclusion on it, but if everything gets so automated, you just need less people. I mean, I guess that's the biggest thing. Like mortgages, I just think that could be very machine driven, if you will, and it probably already started and all that, but there's a lot of jobs that are going to disappear.
I have a buddy that I play Frisbee golf with, and I'm out there playing Frisbee golf with him, and he's just getting these leads where the AI chatbot basically takes them through everything other than signing on the dotted line. And so,
see, you just mentioned that one of the big buyers in San Diego is training AI to close people on the purchases. Yeah, they do it like they're trained to say that when the seller says this is your response, that type of thing. Holy cow.
And so you've always talked about where's the next wave of have to sell houses, right? So if we get to, what percentage do you think we would get to on unemployment where people are going to be like, oh crap, I can't afford to live anymore. I can't afford my house. Like, would it be 10%, 20%?
And I don't even know the answer to that. It's Sean O'Toole 10 years ago, and I asked him about a month ago about his statement. He said that what our country has to figure out is how to have society where 50% of the people don't have a job. 10 years ago, he said that. I asked him if he thought that was still true a month ago, and he said yes. So, that, of course, that'll be unbelievably impactful. I mean,
So
that's why, again, that's one of the reasons why doing this report, to try and contemplate the sequence that entails. Because every time I'm watching something on YouTube, like I'm watching Warren Buffett teach for an hour, and you realize that's not Warren Buffett. It isn't. It's his what?
his avatar.
Avatar. Yeah. And so it's probably what he said at a conference where you're watching it and you think, okay, well, wow, I get to, oh, and then you go, and it's not like that. You just realize there's a lot of substitute for humans coming, for sure. And it's over my head, which is, why I appreciated delegating that to you, Joey. And I know you read 8 books, and and it'll get you to a different understanding than I can. I bought 2 books. I only read the first chapter of AI for Dummies, so it was very fitting. But I realized that I have no business teaching the chapter. But
Well,
go ahead.
I was just gonna say I'm looking forward to this challenge because not only do I know the history of what your time reports have done, what they're intended to do, and I'm looking forward to see how this will really tie to real estate and how it's going to affect, buying and real estate investing in general. How it's going because Buddy has some great tools for real estate investors, but that's just talking about teaching you how to use AI,
Right.
and so the impact that AI is going to have is going to be far wider than 1 or 2 industries. It's going to be every industry.
Yeah. I mean, I kind of sense that, and I don't even know how to contemplate the end result of that, because you're correct in saying, okay, well, if you thought your career was going to be, fixed for a long time, and then you're gone, it's like, okay, I have a house payment. And and that's what Sean was talking about. How do you have society when half of the people don't need to work? They don't have a job. Let's put it that way. And whether it gets that bad or not, but it also seems like a race in a way where the people that are at the smartest at the top are pushing it as quickly as possible. So it's sort of like a competitor.
Oh yeah.
I think nations have that feeling. Like, if I get there first, America, we're better than if China gets there first, that type of thing.
Well,
But I think these companies are also aggressive, So that's
it's a big part of the stock exchange right now too. There's so much money tied into it. So while and a lot of people feel that it's propping up the stock market because there's 2 economies. There's the stock market economy, and then there's the real economy that we live in, right?
Right.
And the one that we live in right now doesn't feel very good.
Right.
So the stock is really an indication of how well I'm doing as me and my family, and so that's where people are right now. Now, one of the other things I wanted to run by you is gold since January 1st has gone up 50%. That's a huge run. And there's a couple reasons for that, right? There's fear. So people are trying to get their hands on as much as they can. Did you know when was the last time that this happened? When it went up 50% in less than a calendar year?
Probably 80?
1971.
71. Okay.
So you know what followed after that? Are you worried that inflation is going to stick around and going to explode here in the next few years?
Well, so interesting. So that's a very interesting question because of where we are in affordability. So, okay, historically we have, a fairly average interest rate, let's say at 6% or something like that.
Mm-hmm.
When it's matched with our price, though, it's the lowest affordability that we've camped out at ever. Mm-hmm. So if you have inflation and you give this real estate market a 10% mortgage rate, well, it'll lock in everybody that has a free and clear house. It'll lock in everybody that has a mortgage rate, and it'll wipe out the people that are on commission trying to sell something because there'll even be less volume. Will there be a ton of foreclosures? No, you'll just now have a reason. And it's very interesting, Joey. So to think back to 74 to 80, when interest rates went from 7.5 to 15. So when you get to 1980, there's a lot of bad charts that happen. So you've helped me put these together. We have unemployment at 10%, and you don't have Like now we have 8 months of inventory and we're freaking out. You know how many months? They had 24 months of inventory. Okay. And they had 10% unemployment. What was the price damage? Zero. Well, one of the reasons was they had everybody at a mortgage at 7.5, right? 5 years ago. They were good.
Stayed there.
They just stayed there. They didn't lose their house. So it's interesting that we could be facing, and that's, one of the reasons really taking a look at the debt. There's a lot of very smart people that are looking at national debt going, that's scary stuff. It's getting too large. We could lose our reserve currency status. Well, that's a very big statement, and made by a guy like Ray Dalio. That's no joke, because Ray Dalio, like, I studied 50 years of real estate charts. He studied 500 years of world history and charted how every country lost world reserve currency status, and he feels like the U.S. is nearly at stage 5 of the journey.
He's got 5 stages, right? And we're 4 right now, right?
Headed to 5.
Headed to 5, and you and what I don't like about that is it's revolution or war.
That's right. That's very upsetting to society, because there's the haves and the have-nots are accelerated. So
yes,
so you can. That's why, in our lifetime, this really hasn't occurred before. So there's we haven't worried about the dollar not being the world reserve currency. And there's just a lot of things to contemplate, and that I always like when I'm writing a report that I want the answers for the questions myself.
Yes. It's just like when we do the tactics brunches, and you're asking all the great questions, but it's because they're just questions that you want to know.
That's right. That's when I study this stuff, I'm not just studying it just to teach it. I'm studying it so I can comprehend it for my own life decisions too, and I just realized I think there's some new ones I have to contemplate. So,
yeah, I think it's going to unwind over a longer period than it has in the past for a couple of reasons. One, there's not number 2 currency that's that close yet, and also the debt that is still held in dollars, not in other currencies. So that's going to keep us from unwind. I'm not saying it's not happening, because Ray's also not sure that it won't happen. And also the other thing that he's not sure that will happen is that it would be a violent war. That there might be some sort of a revolution that could happen that doesn't lead to violence. Something drastic will change, and hopefully it's something that we can be civilized about it.
Yeah. Or avoid it. I guess that's the other thing, is if you have a roadmap, well, why don't we not go down that final road, which corrects some stuff?
Mm-hmm. So, all right, let me ask you one last question. What do you want investors to take away from your next report?
I think I just want them to look at the future with a little better, clear vision of something that's never occurred. I think that's the goal for this report, is to contemplate AI and the country losing world currency status and a few other topics that, you just have to prepare yourself in the event that happens. How do I change what I do to land on my feet? So it is interesting that I even have to contemplate things that in this report, because I really had never thought about that. It's interesting too when you look at one of the things that's happened recently is college debt has been released again and has payments and consequences. So it had been dormant for quite a long time. No payment, just sit there. And all of a sudden, when you look at a delinquency rate, that was 0 until the last 6 months, and it's zoomed ahead.
Oh yeah, no, it's crazy. I saw the chart. I was just looking at that consumer report from the New York Fed, and everything's jumbled in the middle, and then recent, that's just
that's a straight
literally
line.
You don't even call it a hockey stick. It's just straight up.
Okay, well, think of the consequence of that. They're in the house buying range. Okay.
Yeah.
Yeah, well, you don't have enough money. You can't even make your payment to your college. You just ruined your credit. So are you now a renter? So, Warren Buffett's company just spent billions of dollars. And what stock did they buy? They bought the stock of the builders that are building rentals. That's what's coming. So you're going to go You're going to go from home ownership to home rental. That's also not a very good society where they feel like, okay, wow, I can't participate in the goodies.
Yeah.
So anyway, a lot of things, and I don't even know how it ends myself. That's what's fun at doing the last chapter. I contemplate all the way until I'm done.
Yeah, well, it's gonna be robust to tell you anything. I don't think I've ever had a first draft of yours that has 500 slides, and that's not even it yet. Because some of that was just placeholders of like, hey, we still have to build this chapter.
Yes.
So it's gonna get more, but yeah. So it'll be fun. It'll be fun, and it'll be fun to really participate at a different level for me too. So I'm gonna look to make Aaron proud. See how he would have done it. All right, Bruce. Thank you so much for joining us. And all right, everybody. We'll see you next week. And go to the norrisgroup.com and go to the events page and get your ticket. All right, we'll see you then.
All right, Joey. Bye-bye.
Bye.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.